Hello again, Maverick traders, and welcome out to your market roundup. This is Ankit here, and let's break down today's market price action. It's Wednesday, November the 8th. Let's get into it. Let's take a look at broad market analysis, take a look at what the sector heat map is telling us, and take a look at possible setups ahead. So let's get into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So looking at the markets overall, we are still remaining bullish than bearish. Take a look at the returns today. We are seeing a bit of a flat day, but we did went down much lower and then end up recovering most of those losses. Usually, that's a good sign. We are seeing the oil market continues to getting battered here. It's getting down another 2%, 2.1, and gold also finally tumbling lower 1% as well. So what we are seeing, the theme in the markets here in the news is that the market again remains bullish, but the bond yields are falling. So let's just take a look at the S&P chart, and you can see this is a nice resistance that we are up against. But take a look at the price action. After a plus 6% week last week, we are still trying to push higher. And look at the wicks that we are getting here. This is again a more bullish price action than bearish price action. So right now, I think as we are up against this key resistance, a further break and spark a rally, especially as the bond yields are falling, which again makes a good case for the equities to be strong. You can see the S&P and the NASDAQ are doing the same thing. They're up against the resistance as well. So everything is looking good across the board. If you take a look at the advanced decline today, it was 57 to 38. But I think another thing to take a look at this, what's above the 50 moving average, and we're seeing a better number. 32% is above the 50 moving average, and 68% is lower. I think this number was down to 2080. I think so. That's a big sort of an improvement there. So that's what's going on in the markets. If you take a look at the heat map, all the big 7 stocks are still adding on to the gains. Apple, Microsoft, Google. Seems like that's the trade that was. That's where the money continues to flow consistently. As we are heading towards the year end, I won't be surprised that we continue to plow higher in some of those areas that has done the best so far this year. If you take a look at the charts, those are the ones that are back to the previous highs. Now, let's take a look at the market outlook. I'm at a +2. We are above the 20, above the 50, and just a matter of breaking out above this resistance. I think we can get a lot more bullish, maybe to a +3. But for now, I think I'm more positive to the markets than negative. That's what we are. Now, taking a look at the potential setups, again, I have more bulls than bears, so let's get into it. We have this prolonged high base pattern. So what I'm looking for here is a breakout. Can we break out of this consolidation in some of these stocks? So taking a look at Broadcom, AVGO, where you have this a long consolidation for the last few months. So if we can get above this 90-40 area, I won't be surprised that we get a nice little run. How do you play those? You can always do a vertical spread. I think that's one thing I'll be looking as we see if there's a year-end run into some of these stocks. We can also take a look at Progressive here. Nice little high base forming. So a lot of the setups right now, we are in this basing formations, and I think when the market breaks out, we'll probably see a breakout in a lot of these places. Now, lastly, again, there's another one, Verizon. Take a look at Verizon making a nice little high base as well. So giving a little bit more time by doing these vertical spreads. But once we get out of the US CPI next week, again, I think that would just probably cause a bit more of a catalyst to go higher. The only negative that I like here, again, you can take a look at a lot of the energy stocks. They are looking a lot more weaker. But NEM is the Newmont Corporation. You can see we are now breaking to the new lows over here. So a further break of that. I do like this on a breakdown as well. Now, overall, I still like to be more bullish than bearish in the markets. We don't have a whole lot of economic data. Unemployment claims tomorrow. We still have some earnings going on. Sony tomorrow coming out as well. But again, outside of these areas, If there's a one big hurdle that I look at is the US CPI that comes out on Tuesday. Once we get out the CPI, I think we'll probably be able to, catch another breakout to the upside as long as things sort of support. But right now, if you take a look at seasonality patterns, take a look at the bond yields, everything I think is pointing out for markets to stay higher at this point. So that's the game plan here. If you're trying to open new positions up, again, take a look at the strategy, how long you want to give that trade. I will be again holding on a little bit till Tuesday when we get the US CPI and a bit more green signal right after that. Thanks for joining. Have a great rest of the evening. We'll get to you in the next update. Cheers.